Hello and welcome. You're watching First Take. I am Suyash Maheshwari and with me in the studio is Amit Ranjan. Now we have got an action-packed half an hour ahead, but as always, let's start things with a quick check of the morning mood on Dalal Street. Now Indian markets opened in the red with a first tick for Nifty coming in at 19,064 mark. Now this was despite a negative handover, this was despite a positive handover from the US markets. S&P 500 climbed about 0.65%, but it is still below that crucial levels of 4,200 mark. Nasdaq Composite, on the other hand, was up about 0.48%, and Dow Jones also advanced by about 0.38%. Asian stocks, on the other hand, were also trading firmly in the green this morning, with Nikkei opening above the 2% mark and Hang Seng, although flattish, trading with moderate gains. Also working in the favor of the bulls is a fall in crude prices. Brent crude has slipped by $3 since yesterday, and it is currently hovering around that $85 a barrel mark. What's not working in the favor of the bulls though is the 10-year treasury yields in the US, which have picked up by 8 to 10 basis points and is currently sitting above the 4.9% levels. The dollar index has also moved up and it is currently hovering around the 106.7 sort of levels. Now coming back home, Indian markets are pretty much holding on to that morning losses, although they are trading on a flattish note. As you can see on the screen, Nifty as of 9:30 a.m. this morning was down 0.04% at 19,071 mark. So below that 19,100 sort of levels, which was seen as a crucial support in the near term. Sensex, on the other hand, was down 0.08%, hovering below the 63,900 sort of levels. The mid cap and the small cap indices, the broader markets in general, are buoyant this morning. Nifty mid cap 100 is up 0.2% or so, whereas the small cap index is up 0.66% at 12,733 sort of levels. India VIX, the volatility index, has also spiked by about 1% or so, and it is currently sitting just below the 12 mark at 11.97. Now with that, let's welcome our first guest on the show, Akshay Bhagwat, who's a Senior Vice President Derivatives Research as JM Financials. Okay, Akshay has not joined us yet. Amit, the market is looking rather buoyant this morning. I mean, after listless session pretty much yesterday, we saw a sharp decline of about 100 points in the last hour of trade, when Nifty fell below that 19,100 sort of levels. I mean, we'll obviously get cues from what Akshay has to say from a technical side of things, but it looks like that the bounce that we were witnessing in the last in Monday and Friday's trade is at the moment over, because 19,100, 19,200 levels is the level where the market has faced resistance also in the past. When we saw that run up in June and May, where the markets climbed to all-time high levels, 19,100, 19,200 was a critical level for the markets to climb. I'm also looking at Nifty Bank this morning, trading with a cut of about 200 points or so below that 43,000 mark, which is a crucial support level for the index, and it's considered a trend reversal levels. Nifty Bank is down about 0.4%, 0.38% as you can see. Now these numbers are as of 9:30 a.m. this morning, and Nifty Bank is down about 0.3% or so, around that 42,700 sort of levels. Nifty IT was also up 0.2%. Let's carry this conversation with Akshay Bhagwat, who has joined us. Hello Akshay, good morning. Now, we were just talking about the markets yesterday and today. In the last hour of trade, we saw a cut of about 100 points on Nifty. Even this morning, the markets have opened lower. What's your overall read on the market's mood? Has that bounce that we were expecting reversed now?
Good morning to News 9 team. Firstly on the outlook for the Nifty index, yes, what I understand from the last 3 days of bounce back, it looks more like a dead cat bounce to me. We are dealing with a very important resistance, that's 19,200 to 19,250 basis spot in Nifty index. It is mighty important that these levels should sustain if we were talking of any stability in the index going ahead for the November series. Right now, as I understand, understand, yesterday we did see some selling pressure, fresh rounds of short build-up in the derivative space in the futures and options segment, strong call writing at the strike of 19,200. So a lot of selling activity clearly visible at the space of 19,200 to 19,250. This means that we are still not out of the woods. The chances of a revisit of the immediate support, that's 19,000, considering the fact that tomorrow is the weekly expiry for Nifty, and a lot of put writing positions are placed at the 19,000 strike. So that will be the first set of support. And secondly, 18,800, which was the recent swing low, that also would come into place in case the selling pressure aggravates. Obviously, the market should be looking at how the FOMC talks span out as it starts in the evening today. So that will be one crucial event on the watch list. But broadly, the setup, irrespective of what is said in the policy or what is done, the setup is weak. And as I said clearly, from here it is a sell on rise till we are below the 19,200 250 mark.
All right, a sell on rise market till we are below that 19,200 250 mark, as Akshay has pointed out. Akshay, Bank Nifty is also showing signs of weakness. We have been talking about 43,000 levels being that crucial make or break level for the for the index. It has corrected by about 300 points or so in the last hour of trade. I think this morning it's also down about 200 points, significantly below that 43,000 levels. Is the overall trend negative? What are you viewing? What are your expectations?
Yeah, yes, Suyash, I cannot agree more. It's a double top, which is a bearish development, which I have spotted on the Bank Nifty index from the technical charts. Now, this bearish development is promising a target of around 41,500. So we are still around 1,000 to 1,500 points away, roughly, from the target area of the bearish pattern, which we have seen forming a few trading sessions back. Now, yesterday's fresh selling action at the area of 43,000, 43,200 is just an indication that the trend may resume. That's the downtrend I'm talking of. So clearly the negativity is intact for short term in the banking index. The recent swing lows of 42,000 would again come into picture. That's the support zone if one is looking at. The trend is more weaker as more than what Nifty would be in case of the bank index. So I would suggest banking is weak if you're looking for the November series. For any reversal, if we were to talk, the levels are pretty far off. That's above 44,000. So even if Bank Nifty recovers a bit tomorrow, it doesn't mean we are out of the woods. So clearly a shorting space, or at least if you have longs, you need to cover it up, not sell puts in such the way the charts are suggesting. So clearly a negative setup and stay away at least from longs is what my view would be for the bank index.
Now, Akshay, we had three major Nifty companies coming out with its results yesterday. Let's talk about Bharti Airtel first. Now, the results were pretty much in line with what the street was expecting. Although profit figure did slip by about, I think, 38% or so on a year-on-year basis. Now, this was on the back of an exceptional loss relating to, interest charges and other regulatory levies. The stock also is, down about 0.5% this morning or so. But on a year-to-date basis, it has given returns of about 12%, outperforming both Nifty and Sensex. What's your overall outlook on Bharti Airtel, sir? What are the levels that you'll be tracking?
Well, the results are out, the results are good, and the reaction post results is a pretty tepid reaction, as I understand. It's slightly down, but again trying to regain its gains. So the support of 900 to 905 is the level which you need to note for Bharti Airtel. One is it's a very strong technical support. Second, 900 support also coincides with the put writing as far as the open interest activity goes for the November series. So clearly 900 is the level you need to keep a note on. Till 900 sustains, you can expect some recovery in Bharti. The overall chart texture of Bharti is still not weak. It is just in a consolidation zone, as I understand, and there are good chances that it may recover from the 900 mark. If it recovers, then the immediate target is 930, because a lot of call writing placement is seen at 930, and you may get higher targets if it sustains further above that. So right now we are keeping a close watch on how the stock would play out today, especially because today is the first reaction day post results. 900 is what it should sustain. As of now, it has. So clearly an intraday buy, as I understand right now. Stops below 900, recovery you can target 930, and in case it extends further, 960 can be your target area going ahead.
All right, that's the view on Bharti Airtel. Akshay also wanted to talk about Larsen and Toubro. L&T on a whole delivered a very healthy set of numbers, exceeding the street's expectations, on most front. But I think what stood out for me personally was that order book, which grew by about 72% on a year-on-year basis. And management also has, expects L&T to outperform their FY24 guidance on both as far as revenue is concerned and EBITDA is concerned. But the stock this morning is down about 0.7% or so. And in the last month, we have seen a fair bit of correction taking place in this stock. It's down about 5% or so odd levels. What's the story there? Why are we seeing this, this correction in L&T playing out?
See, the stock is a bit overstretched. The technical structure is strong. It's just that the stock is overstretched on the technical parameters. Now, if you look at the overall activity from the 3100 to the slight correction which we saw till 2800, a lot of shorts were built in the month of November, as I understand, based on the derivatives outlook. Today, even after the result outlook, despite good numbers from L&T, we are not seeing any positive reaction post the results. So clearly, the market is going to take this result as more of a non-event. It looks like it's going to stay on the sideways or a range-bound trades, as I understand. The crucial support you need to mark here is the level of 2850. So till L&T trades about 2850, there is no danger to the stock. In case that breaks, then that would be a short-term sell trigger. There is no long-term panic, but a short-term trigger which might see some degree of weakness. As it currently stands, I'm seeing a range, 2850 being the lower end of the range and 3000 being the upper end of the range. The stock is expected to trade within this range and no major risks are seen as yet as far as the broader chart structure is seen in Larsen and Toubro.
All right, L&T is expected to trade in a consolidation in a range of about 150 points or so. As you were also seeing on your screen the numbers, the report card of L&T, I think the revenue is up by 44% or so. Profit figures have also, come in ahead of the street expectations, coming in at 19.3% on a year-on-year basis. EBITDA, earnings before interest, tax and depreciation, has also improved by 15% on a year-on-year basis. So that's the view on L&T.
Akshay here, hi, Amit here. Before we let you go, could you let us know your top 5 picks for the day, for the markets?
Yeah. Good morning, Amit. So the top 5 picks which I would recommend today, one is, the first one here is, just give me a minute. Yes, so it is Dabur which I have recommended as my first trade on the buy side. If you look at Dabur, well, it's a possible double bottom in the making, an underperformer in the last couple of months and trying to regain its lost ground. So a positive placement on the derivative space, and I probably feel that FMCG pack may stand out for the month of November. So Dabur is the front runner here. Buy Dabur at the current rates. I will keep a target of 543 with an extended target of 551. Stop loss 515 on this trade. The second trade I would recommend is from the pharma space. It is Glenmark Pharma. Again, a defensive space, but a positive chart structure supported by derivatives data. Buy Glenmark at the range of 750 to 745 with a target area of 772 to 781. Stop loss 735. The third trade is from the IT space. Here it is Wipro and beaten stock, oversold parameters, possible short covering candidate, initial signs of jump from the support scene going by the last couple of days trading action. So buy Wipro, I'm expecting a recovery here in this IT stock. Target 397 to 405. Your stop loss will be 372. The fourth trade would be from the power space, that's power grid. 200 to 202 would be the buying area. A lot of long bets seen. Power space has been in news, has been a positive sector overall since last 3 months, and I believe this sector is going to continue to perform going ahead. Keep a target of 215 to 219 on power grid. Stop loss 192. And the last trade here, the fifth trade, is from the cement pack, Ramco Cement, with an exceptional strong chart structure here. A breakout seen at the level of 9 950 a few trading sessions back, respecting the supports, regaining its buying from the support area. So buy Ramco Cement at 993 to 990, target 1037 to 1051 with a stop of 972.
All right, Akshay, that's the view. Your view. Dabur is a buy. Glenmark and Wipro also, a potential buy candidates at this point in time. Akshay, always a pleasure speaking to you, sir. Thank you for joining us on First Pick this morning.
My pleasure. Thank you.
But Amit, with that, let's move on. Let's also take a quick check of, how the markets are currently trading. As I can see, pretty much flattish. Nifty is, still holding on below that 19,000. Actually, it has declined quite significantly from the opening levels. Nifty is down about 0.26%. Now, this is as of 10 a.m. this morning, down about, down above, and it's currently hovering above the 19,000 mark, just 30 points above or so. But with that, let's also welcome our second guest on the show, Mr. Sudeep Bandyopadhyay, Group Chairman at Indie Trade Capital. Good morning, sir. Welcome to the show.
Good morning. Thank you.
Yes. So first, I want to begin by asking you about the overall mood, your overall read on the market mood. Now, the Nifty is currently, hovering in that range of about 200 points or so. It is unwilling to go past that 19,250 sort of levels on the downside. Seems to be holding, at least for now, that 19,000 mark. Do you expect some sort of consolidation going forward?
Definitely a bit of consolidation is what we are seeing last few, I would say, days. FIIs have been relentlessly selling, DIIs have been buying, but there is a downward bias in the market, and we have been seeing that getting played out every day. I think, today I would say, before a major event, probably there will be a bit of a lull. FOMC decision will come later tonight, and we will react to that and Chairman Powell's statement tomorrow when we start trading. So I would presume that the market would not, shoot either in the downward direction or in the upward direction as far as markets are today. We will definitely see counter-specific moves based on, the quarterly results as are being announced. We have seen a pretty bunch of good results yesterday. Today also there are a whole lot of Nifty stocks announcing results, and the market will be keenly watching that. One good thing I would like to point out here is that I think the scare on the oil prices going significantly above our tolerance level, I think that has subsided to an extent. I think the Gaza, Palestine, and Israel war. Probably the market has realized that there is very little impact on oil prices or disruption in oil supply because of the current ongoing conflict. Also, the subdued economic data coming out of China definitely doesn't help the cause of oil prices going up. So under the circumstances, I think this is good news. However, I must mention here that yesterday a Goldman Sachs report came out which talks about oil prices going above $100 per barrel decisively after June 24. Multiple reasons they have cited, but I think that's some distance away, and there are too many geopolitical factors to consider before we kind of act or react based on that Goldman Sachs report. So overall, I think from an India point of view, today I would say is a wait and watch. Fundamentally, we will be led by what's happening as far as corporate results are concerned. And of course, I will be on FOMC decision and commentary.
All right. Sir, talking about the Federal Reserve's policy decision meet, at least, the reports that I am reading, most analysts, and by most analysts, I mean, I think 99% of them are expecting Fed to maintain the rates this time around. What are your broader expectations, sir? Can we, expect Fed to hold on to the rates, at least for the time being?
Yeah, absolutely. I think you're absolutely right. Pretty much everybody in the street is of the view that rates will not go up. But, the fact is the US economic data continues to remain strong. And under the circumstances, it is very difficult for the Fed to, come out with any kind of, dovish statement. So the commentary of, Fed Chair Powell will be very, very important. what he indicates in his speech after the rate announcement is over will be carefully watched. But having said that, I don't expect any dovish statements from Chairman Powell. He will probably reiterate his view higher for longer in one way or the other. Whether the tone is dovish or hawkish will be what the market will be watching carefully.
Sir, talking about Mr. Powell, I mean, to me at least, it seems that the Fed is in a catch-22 sort of situation. You can't really cut rates, inflation is too hot, can't raise them. 10-year yields, the US 10-year bond yields are, hovering near that 16-year high. What's the way out, sir, in your opinion?
I think at one way, if you look at it, I think US economic resilience is very clearly getting demonstrated. I think this is the one major economy, the largest economy, which is still, in spite of the rates going up to where they are, it continuously growing. The labor markets are strong. GDP data is came out as much better than what even the market was expecting. So I think that's a good news. But on the other hand, the interest rates hovering around 5%, I think is not too good for the future economy and as well as the markets. So it's a delicate balancing act for the Fed, and that's pretty much the reason why most of the analysts are feeling that Fed will let the rates remain where they are. Another point I must mention here is that even though Fed has not done anything to the rate, market has taken the rates up already. So Fed's work to an extent has already been done. So under the circumstances, probably there is no compulsion on part of the Fed to go ahead and announce one more hike. So I think that's probably a good part as far as Chairman Powell's job today is concerned. But of course, he has to keep balancing and keeping the expectations on a tight leash.
All right. Fed is expected to keep a tight leash on the market given the resilience, but we also have a lot of earnings coming out this morning. I think 4 major Nifty companies, your Tata Steel, Hero, Motorcorp, Britannia and Sun Pharma, are due to come out with their Q2 September quarter results through the day. Now, sir, hold on. Amit over here has prepared expectations, what the street is expecting from the report card of these companies. Amit, let's begin with Hero Motorcorp.
Okay, the country's largest two-wheeler maker is widely expected to report double-digit growth when it comes to profits for this September, aided by price hikes, favorable product mixes and input cost pressures. Revenue growth is likely to be muted due to subdued volumes. Nearly 1% year-on-year decline in volumes for September quarter due to weakened entry-level motorcycle demand segment in the segment. Now, profit after tax is likely to increase 24.3% to 1,290 crore, up from 1,038 crore in the year ago period. Analysts estimate that the company revenue will go up almost 2.2% to 9,725 crore in the quarter under review, up from 9,075 crore the same quarter last year. The volume of vehicles for the company is estimated to decline marginally 0.8% to 1,417 lakhs, while realization is likely to increase by 2.8% to 65,305 per unit. Wow. Analysts expect that a significant rise in margins, though, up to 13.9% as against 11.4% the same quarter last year. The company's other income is also likely to rise by 60% to 150 crores. Now, Mr. Bandyopadhyay, there is something on the operating margins which are sequentially expected to rise by 50 basis points. Do you think this can offset the losses that the EV segment and the higher advertisement spends are going to cost to the company?
Yeah, definitely. I think, the quarter gone by is a story of two things. One is, the cost pressure has come down. Pretty much raw material costs have come down, and that will get reflected in operating profit margins going up. And yes, to an extent, the developmental expenses on the EV, etc., will get offset through this, the reduction in the pressure on the costs. The other factor which I think is getting played out is pretty much, the demand, rural demand was not really something to write home about. There was also the Shraddh period and things like that. So probably, I think, the Q3 will see a real bump up in volumes and profitability. Also, the number of vehicles sold, particularly the entry-level vehicles, with the agricultural crop arrivals happening, money getting into the rural India. I think things should start looking up for Hero Motorcorp as far as volume is concerned, and also margin is concerned from Q3 onwards. That's what our belief is. This quarter's bump up in profitability and the margin is pretty much on account of cost pressures easing out.
All right, that's the view coming in from Sudeep Bandyopadhyay. Sir, always a pleasure talking to you. Appreciate you joining us this morning on First Take.
Thank you.
Amit, the market I'm seeing is still, hovering with a cut of about 0.2% or so. As you can also see on your screen, I think at 10 a.m. this morning, Nifty is down about 0.22%, still holding on above that 19,000 mark, which, as pointed out by our experts, will be a make or break level for the index going forward. Sensex is also trading with cuts of about 0.24%. Above that 63,700 sort of levels. Mid cap is flattish, down up about 0.07%, but below that 39,000 sort of levels. The small cap, Amit, has been a clear outperformer in the last few sessions, and it's also trading with gains of nearly 0.6% or so, more than 0.6% at around 12,727 levels. That's the market, how market is looking at as of 10 a.m. this morning. But with that, it's a wrap on this edition of First Take. Keep watching News 9.